live everywhere else. Hey guys, you're here because you need answers to buying houses. You need answers how to buy a house. What credit score do you need? What down payment do you need? What programs are available? Can you build a house? Can you buy a resale? Can you buy a condo? Can you buy a manufactured home? We have all your answers. What your job is to do is to load up that chat box with your questions, comments, concerns so that we can get you down the right path of home ownership in 2024.
Like I get a hold of you yesterday from Michigan who was trying for the down payment assistance program. I think we got him into it, right?
Yeah.
So yeah, I think that one came from here where somebody wanted the down payment assistance program and they said, hey, can you do it in Michigan? And we had to dig in, but we found out, yes, and we got them going.
I'm here because you guys go live when I'm on lunch. Well, thank you, Whoville hater. We appreciate that opportunity. First, not last. Never last, Whoville hater. Never last. How is the green chilies in your neck of the woods this time of year? Is it kicking this time of year? Are they in season?
Dude, green chili is a religion in New Mexico. And nowhere else, by the way. Once you leave, you're like,
spicy.
Hey, I like some green chili. They're like, you mean jalapenos? No.
Serranos?
Green chili.
Anchos?
What? Yeah.
Green chili. What is it called?
It's Hatch green chili. It comes from Hatch, New Mexico.
Hatch. That's what it's called.
Hatch is a city. It's actually a city in New Mexico, and yeah, it's.
What's it called in Old Mexico?
Orale.
Okay.
Never.
GRCA, I think that's Garcia. Do 401k withdrawals used for down payment usually go smoothly? Any common issues? Yes, there are common issues. GRCA, very common issues. Pay attention. Grab a pen. Don't forget these if you're going to use it for your down payment. Here's the issues. A lot of 401k companies operate differently. Some of them you may get your money in 48 hours. Some you might get it in 2 weeks. Some you might get it in 6 weeks. All of them have different terms of withdraw. TOW, okay? Yeah. So what I would do, I'd recommend to you, GRCA, thank you for the hearts, whoever's giving the hearts. Every time we're answering one of your questions, please just tap that screen. So here's what I recommend, GRCA. When you're thinking about buying a house, could be soon, I would call the 401k company and say, hey, if I was going to access money, number one question, how much can I access? Number two question, how long does it take to get into my account? With that data, you'll be able to put the transaction together smoothly so that your money will be in the account by the time you close escrow.
And GRCA, here's another thing. Very important, very important. Make sure you get a good loan officer who actually knows how to do this, because if he says, hey, why don't you just try and take the money out real quick and then put it in your account, and that way we can put it as a down payment later, you got a guy who doesn't know what the hell they're doing. What you need is TOW inside of the escrow, where we actually wire the funds from the 401k to the escrow, so we don't have to track it, and it'll save you an accounting nightmare a year from now. So you need to find an LO, loan officer. You need to find an LO who actually knows how to do this, because if they say, yeah, you should probably take your money out of your 401k now just so you can be ready. No, you got a guy who doesn't know what the hell they're doing. You need to say, hey, listen, where am I getting it? Fidelity? Cool. Send me the statement. I'll take care of the rest.
Yep.
And then we dig in and we go, hey, Fidelity, we need the TOW, terms of withdrawal. We need the TOW for your thing. I have a live escrow. Here's the escrow number. I have this way of doing things, and we're going to make it happen.
Also, you're going to need certain documentation from your loan officer. We know what to get you. So when the time comes, GRCA, just reach out. If you're interested in getting a home loan, the link in the bio, select apply for a home loan now. Our phone number there if you want to talk about it as well. Sexy Black, what's up?
What's up, Sex Black? What's
Marian
up?
Lopez, is there programs that help you with
closing costs? Yes, there are programs that help you with closing costs. There are, like for instance, we have one called a CalHFA with a zip.
All states. Go ahead.
We have one here that's called CalHFA with a zip. So CalHFA is actually designed to help you with the 3.5% down. They give you 3%. And then if you throw a zip on top of it, they can throw an extra 2%, which usually covers closing costs. Not everything, every time, but it comes close. You should always have 1 month reserve in your bank. If you don't have 1 month in reserve in your bank, don't even try and buy a house. Don't even try. Because if you're like broke, the underwriter's going to go, hey, this person's like broke, and they want to borrow $500,000. Probably not. But if you have 1 month reserve, what is reserve? PITI, principal, interest, taxes, and insurance. $3,000 is a good number. So if you have $3,000 in the bank, then we can go after the down payment assistance program and the closing cost program. However, it's not free money. They're never simple. There's always some type of catch. Always some type of catch. If you want to know what they are, ask.
Yeah. All right, guys, hang in there. We're going to get to every single one of your questions. There's a lot of questions popping up. We're going to call you out and answer your question. We got to move a little faster today. Right now, at least.
Really?
There's a lot of stuff coming up.
Okay,
yeah.
all right.
I want to help everybody,
Dude, I want to help everybody too.
Then we got to speed it up.
Okay.
Here we go. Will the loan taken out from the 401k be accounted for in the debt-to-income ratios?
Depends on how your TOW is. If your terms of withdrawal state that you must pay back the money, then I have to. If your terms of withdrawal state that you never have to pay back the money, then I don't have to. It is terms of withdrawal. So there's an amount where you can borrow the money. There's an amount where you can take out. There's pros and cons to doing it each way. So make sure you got a guy who knows what they're talking about.
There you go. Whoville Hater, what about the Roth IRA? Can you borrow against it without penalty?
Okay. So that's a good
he's
question.
setting you up, man.
I know. He's
setting
you up. So Roth IRA, kind of a setup and kind of not. Roth IRA is what's called non-qualified money. Qualified means it's qualified in a government program and it hasn't been taxed yet because it's a qualified program to do this. Roth is different. Roth, you go with after-tax dollars and you've already paid the tax, so the growth on it is non-taxable. However, you cannot start withdrawing off of your Roth until you're 59 and a half years old. So if you're less than 59 and a half years old, you can't withdraw or else there is a penalty.
Ding, ding, ding.
So
we are not your financial advisors.
We are not your financial advisors, but I happen to have a securities license, insurance license, and I know all of these things because, well, that's what I do for a living. So I know about the Roth. There should be a program where you can borrow against the Roth, but you're borrowing money against your Roth. So, yes.
AI art motivation. The issue is the salary we all make in middle class and the prices for the houses is impossible.
You are correct. AI art motivation for
Not
a lot
impossible.
of people. Well, I just saw a house. Okay,
Not
you're going to love this.
impossible.
Okay, so you know I watch the houses in Austin because I'm looking for investment opportunities. I saw one, 3-bedroom, 2-bath, $245,000 right outside.
Deals out there.
245. I sat there and I went back in. I was like, 245,000, and the market's a little higher than that. So this is kind of a motivated seller. But I looked at 245,000. I was like, that's a $50,000, $60,000 income guy.
Well, check this out. In California, in the desert, 2 properties. One for $100,000, one for $300,000. You gotta go to the desert, but they exist.
Where'd you get the $100,000 one?
29 Palms.
Really?
Both of them are in 29 Palms.
Oh shit! No kidding.
Yep.
Okay.
C. Smith, Rajvinder C. Smith, thank you for the love.
What's up, Rajvinder? Great to
Marian
see
Lopez,
you.
Marlon Lopez once again. Is
Yep.
there programs to help you with closing costs? Yes,
We just
great
covered
answer.
that. Yes, there is.
Keish Taylor wants to know, what states are you in?
Okay, what states? We operate in all 50 states. All 50. Not all lenders can say that. Why? Because a couple of states are really hard to get approved in. Hawaii is very hard to get approved in. New York is very hard to get approved in. We only got approved about 6 months ago, and we operate in all 50 states. And we have a down payment assistance program that's available in all 50 states. Not all loan officers can say that either.
Karina Sandoval, for teachers?
For teachers,
We
yes.
love teachers.
We love teachers.
Teachers.
I think teachers, well, in most of the country, teachers don't get paid what they're worth. In California, it's a little different. I think some teachers get paid way more than they're worth.
Ballers.
Some are get paid way more than they're worth. But yeah, teachers, we love teachers. There are programs for teachers, yes.
Guys, most of the stuff is marketing, but we got some extra special for teachers. So if you're interested in getting a home loan, guys, you know where to go. Link in the bio. Gel Eto. Wow. My LO did not contact my 401k company at all.
Oh my
I
God.
did all the work.
Then you better make sure that you should probably talk with his manager because there's a lot of things that could go wrong if you did all the work. A lot of things that can go wrong. So usually you get somebody who understands the system because there's limits. Like for instance, in one of the cases that I did, we were only allowed to draw $11,000 penalty free. 11,000 penalty free. Anything above that had penalties. So we had to factor in the penalty cost into the overall withdrawal above $11,000. And we did it. And I was able to pull it off. But there's a lot of little hurdles that you have to go through. Vesting is a big deal. People find out at the end, hey, I don't really have the ability to pull this money out because I'm not fully vested. There's a lot of things that can happen.
Jason, I have a 710 credit score. I make $95,000 a year, and I have $12,000 in debt as of right now. Help! You don't need help, Jason. That's a good file.
$95,000
bro.
a year.
Strong.
Shit, you're cracking 420 today.
Woo!
420. Might be even 420 is. We don't know what 420 is. We've never worked a weed.
Legal in California.
We've never worked a weed conference. Have we worked a weed conference?
High times.
Do you remember that?
Yeah.
We worked a weed conference.
It was a good one.
It was fun. It was.
I think Snoop was there, wasn't he?
That was a crazy one. Yeah.
Yo said, how much down should I put down?
Yo. That's a very specific question. If you're a veteran, I'd go with 0. Yeah, I'd go with 0. If you're going with USDA, I'd still go with 0. I would still go with 0. If you're going FHA, in this market, I'd put 3.5%. I know they're going to say, hey, maybe more because you want to buy down your rate or stuff like that. I don't think it's a good idea to buy the rate down right now. I'd seen some loan officers on TikTok. This guy's like, hey, you should really buy your rate down. I'm like, yeah, if you step back, that's not a really good move. That's not, I can justify it with math. Because if you look at the surface, it looks like a good move. But if you back up a couple of steps, you'll go, yeah, that's pretty stupid. Okay, cool.
All right,
it's like,
user.
It's like, wait, hold on, I got to do my analogy here.
Okay,
It's like, hey,
analogy,
listen, hey,
go
I got to
on.
get like 4 loans out. I got to fund this deal. And if I do that line of cocaine, it'll probably happen. I can make it happen. So
Real
it looks like a good deal. But if I do that line of cocaine, there's some more ramifications down the road that I probably should not be doing.
Like jail?
Yeah, could do that.
Okay. User 2070 told Jason, stop spending money.
Yep, stop spending my money.
Chelsea, my spouse has been fixing their credit, and our credit is now good to start applying for a house.
Chelsea, you know what to do. You know what to do. You need to call me. You need to call Chris. One of us.
All right,
and
you get an
once
accent.
we do, dude, I get an accent.
Doesn't that correct?
Orale. I get a orale accent. I get a New York accent once in a while.
What's the New York one?
I'm walking here.
You're sitting, dumbass.
That's right, I am.
All right, time for commercial.
You need a badass loan? Call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by calling the numbers on the screen. This is their personal cell phone number. Don't call right now because Chris will not answer, neither will Lee. But as soon as we're done with the live, we will answer. This will disappear now.
Google Hater said, Austin is imploding right now. Too many houses are being built. Rent renewals are decreasing a lot.
Whoville Hater, you're right. You're right. I'm watching it because I have a house in Austin and I'm looking for more investment opportunities. And I'm like, yeah, that's kind of nice. It's kind of cool. But I'm watching everything go down, 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 down. And I work with a lot of realtors in Austin. I talk with them at least every week. And they're like, Lee, I don't understand what's going on. The market is going down. Prices are going down. There's not a lot of people. I'm like, yeah, they are on a weird side of the cycle where Austin's a little overbuilt right now. It's just a little bit overbuilt. It will fix itself as soon as rates go down. But Austin is going down, and I'm watching. What is that? Dude.
Every day, man. I don't know what the issue is.
We keep getting these warning flags that say they're about to ban us. And we're just talking. I don't know what I said. I'm trying to think.
I don't know.
Using the word IMPL, ODING is probably. Yeah. Because you can't use the EX.
Chelsea, but our realtor
Oh,
told us
the
not
ING.
to because lenders won't like to see that. All right,
The
Chelsea,
realtors-
what was your question? My
Okay.
spouse is fixing their credit and they wanted to start applying for a house. But my realtor told us not to because lenders like to see that. Okay, so here's the thing, Chelsea. We need to see it, okay? It doesn't mean you're going to get approved today, but at least we know what the challenges are so that we can send you down the path of correction, okay? It's just like a doctor, okay? You don't feel well, you go to the doctor, it's like, oh, here's the problem. Take this medication or do this exercise, whatever it could be. Same thing with your loan officer. If you don't qualify today, it's not a denial. It's you don't qualify, but if you do this, this, and that, you will qualify. So don't listen to that realtor. You do need to talk to the lender. It's the most important piece of the transaction because it's the financing, guys.
Yeah,
You
Chelsea.
need to know where you are in order to figure out where you're going.
Chelsea. One of the things that I think is under that question is if you challenged some of the items on your credit, the lender will get the false positive, which means when I pull your credit, if you're right now challenging Citibank and Wells Fargo and something else, well, by the rules, they have to remove it from the credit score. So you get a false positive. You went from a 560 to an 820. Probably not that far, but 700. 560 to 700, that fast. Well, that's because for the next 30 days, these cannot be counted because we're challenging them. Now, if I as the LO know that you're challenging them, then I know what to do with the file. So picking the good LO, it's very important. It's very important. It's probably more important than your realtor. No, it's absolutely more important than your realtor.
Cool Hand Duke. That's
Cool
a
Hand
Star
Duke.
Wars reference.
No,
Nerd.
Cool Hand Luke.
Yeah, it's a Star Wars reference.
Cool Hand Luke was
Oh, it's not Luke Skywalker?
no, that's not like
Who is it?
Cool Hand Luke was a movie.
Oh.
Yeah, it was a movie back in the 80s. I think it was the 70s. Cool Hand Luke.
Old nerd.
Yeah, old nerd. Yeah.
Just kidding.
Yeah.
Cool Hand Duke. That's a cool name.
Yeah.
Karina Sandoval. My credit is 690. Oh, he said I have $640,000 in debt. That's what Cool Hand Duke said.
Oh, dude.
You
Yeah.
have a badass house. That's normal.
Yeah, that's not that bad.
Yeah.
I mean,
Badass house.
if you put two of my houses together and the mortgages, I got more than that.
I hope that's not autos.
I got more than that. Yeah.
Karina
Yeah, it's not
Sandoval.
bad.
My credit score is 699. $5,000 debt. $50,000 income. What would I qualify for a loan?
So you're probably with that much, you're probably cracking with today's interest rates 260 to 280, somewhere in that range. But when the rates go down, you're going to be cracking 300, 320. If you're really serious about it, you should start moving like right now.
Yeah. Victor, how does union rates work when buying a home in California?
So, Victor, union rates, that's your hourly wage. So we calculate your income. When you send me a pay stub, on your pay stub, it'll actually say hourly rate. Let's say it's $46.25. Well, I put it into my calculator at $46.25, and then I put 40 because that's a normal work week. And then I calculate year to date. And your year to date, let's just say it says 72,000 year to date. All right, cool. So I put year to date, and then I use a special loan officer pay date calculator, and I put that in there, and it tells me how much you're making so far. Then I look at overtime, and that's a different line item, and I go, okay, cool. You make $46.75 an hour, but on overtime you make $62.23. Then I figure out how many hours you've been working for the last year or two, and then all three of these line items come together, and I create your calculated income. That's how it works.
Yeah, Victor, what's your trade? What trade are you in, man? Let us know.
Dude, what do you want to? You
And
going to
where
tell
you
us?
at? What city are you in California?
What
Where you live?
city?
Jim Paul Howard. I have a question about this. The house I bought for $100,000. Appraisal was $140. Roof removal $250,000. Absay? What's that? Asbay?
Asbestos removal.
Oh, asbestos removal.
So if you bought a house for, I bought a house for $100,000, appraisal 140, roof removal, because it sounds like you're in a hazardous situation where you got to get rid of hazardous material, and it's actually costing you more than the house is worth. Yeah. Now, the truth of the matter is, if you financed that inside of inspections, they probably would have caught that. Because
Did
you know what?
close on it?
Well, yeah, because you know what happened is the bank doesn't want to have a note on something that it's upside down on. They just don't.
Give us a little more data.
Yeah,
on that,
we need
Jim.
more data, because if you're saying that you bought a house for $100,000 and you're like, hey, I got me a deal. You know why? Because the appraisal is $140,000. Yeah, okay, cool. And then a hazard material came out and they're like, hey, you got asbestos on the roof. It's going to cost you $250,000 to remove it. Yeah. If you spend the $250,000, you're upside down $100,000 plus the $100,000. That's pretty tough.
More data, David. Not David. More data, Jim.
Yep.
David, I own my home 100% outright in New York City, or could be New York City. I don't know. But credit ranges 500 to 550. Can I qualify for cash out?
No, David. Nope. Here's some hard, tough love, man. This is what it is. You earned that 500 to 550 FICO. You earned it. How did you earn it? Somebody lent you money. You didn't pay it back the way you're supposed to. So you have a 500 to 550 FICO. So when you go to the bank and you say, hey, Mr. Bank, trust me, bro. Lend me $250,000. I'll pay it back on time. They're going to like, okay, cool. Let's see what you've done in the past. Oh, no, you haven't paid anybody back on time. No, you're not going to get a cash out.
Okay.
Harsh. A little harsh, but true.
Hulu Hater said Jerome Powell is going to lower the rates this week, hopefully.
Hopefully Hater, nope. I really don't think so.
Tomorrow's the meeting,
I
though.
really hope I'm wrong. But Vegas says 0% and 100% last I checked, which is 2 days ago, in September. 100%. Why? Because PCE came in very good for this motion. Very good. PCE. CPI, not so much. But PCE is the big one that they look at. So, the Vegas was putting 100% chance on them lowering it in September. And everybody's like rallying, going, hey, this is going to be great. It's going to be amazing. Hey, we're going to finally afford homes again. I'm like, no, that's not how it's going to go. No, if you actually study the numbers, here's what's going to happen. So as you get to the top of the roller coaster and you finally hit the peak of the roller coaster and that first car starts to go over, do you get a lot of momentum right there?
Nope.
No. You got a little bit. It's not nothing. It's something. But it's going to take about 4 or 5 of them cars getting over that hump before you start feeling that whoa. And that's what's going to happen. That first interest rate decrease is going to be 25 basis points. My opinion, I could be wrong. I hope I am, but I'm usually not. So 25 basis points. And then we're going to go, oh, here we go. And we're like, hey, we're not really, this isn't very exciting. We're kind of paused here. And then when the next one comes, I don't think it'll come to December, but when the next one comes, we're going to go, oh, here comes another car. And then it's going to start going, oh, interest rate. And then all of a sudden, buying frenzy. Free money. Yeah.
Yeah, but if you're right, Hulu Hater, and you take that to Vegas, you can go rich.
Yeah, I know, right?
Black Cheese. I'm in Virginia Beach. Can you help?
Oh, yeah.
What are the average rates with a credit score of 689 to 720 in New Jersey?
So, well, wait a minute. If you're in Virginia Beach, Mike, oh, no, they're different people.
No, that's Mike. Oh, no, okay.
No.
I'm in Virginia Beach.
Yeah.
Can you help? That's
I'm
Black
in Virginia
Sheep.
Beach. Black Sheep, yes. Virginia Beach, yes, we can. All 50 states, and we have zero down program for all 50 states. It sounds great, but there's problems with all zero down programs have a catch. All of them.
Now, Mike. What are
Now,
the
Mike.
average rates with the credit score of 689 to 720? I'm in New Jersey.
Okay, so there's no such thing as average rate, Mike. Everybody's file is unique, and a 689 FICO is a way different rate than a 720 FICO. So there is no average. There is a number. Whatever that number is, we dial that in. However, Mike, if you went to New American Funding's website right now, they put together the perfect profile. And what they say, Mike, is that you can get a VA 30-year fixed, 5.75. You can get an FHA 30-year fixed, 5.75. You can get a conventional 15-year, 5.75, and a 30-year, 6.25. So that's what New American Funding puts out in a perfect profile. In a profile, it's not just credit score. It is assets, debt-to-income ratio, balance of credit. So all of those things factor in, and then type of loan. Because if you have, let's just say you have a 800 FICO score, 800, I'd go conventional all day, every day, because the MI is going to beat the 0.55 of an FHA. It's going to beat it all day, every day. So FICO score is very important when it comes to that, Mike.
Yeah. David, thank you for the love. Chelsea, that's exactly my question. Thank you. I'll reach out to y'all soon.
Yeah, cool. Yeah, if you're, remember she's the credit person. So Chelsea, if you're challenging credit, you have false positives right now, and you don't know what they are. But if you're working with a good LO, they know what that is. Like if you told me, hey Lee, I'm going into credit repair. All right, cool. Tell me which line items are going with, and tell the credit repair people that I have ability to question the progress. So when we call them, we say, hey, where we at? I say, okay, cool. Let me call the credit repair company. Oh, okay, cool. They're challenging this. They're at the 4th line of questioning. That means they've sent out 4 letters over 4 months, and we've gotten 2 or 3 of them removed, because when it's actually time to get you qualified, I'm going to call the credit repair company and say, I want you to withdraw all challenges, or you'll do it. And then once you withdraw all the challenges, now I got the real score, and then I'll pull credit that day.
Who hater? Did you see that cross country is using FICO 10 checking the last 24 months?
Yeah, well, yeah. Wow, how do you know that? Whoville Hater's He's a baller, man.
Plugged in, man.
He's plugged in.
Into the matrix.
Yeah, cross country. So cross country, we actually almost worked at cross country. We're like, how close were we to? We were like signing the contract.
Like the next day.
We were gonna sign the contract, get a very big bonus, and go work for cross country. And then I had a little birdie that worked for him, and I said, "What do you think?" And they said, "You guys won't like it here." And I said, "Why?" And they said, "Because of the way you market. You are very free with your marketing. You put things out, and you really, really, really want to talk with your customers, and they want everything tight." And I was like, all right. So I would suggest you have one more meeting with the marketing division and ask them about your marketing. So I did. We got on the line, and we're like, hey, things are looking good. We love the bonus you're about to give us. We're going to send you guys a ton of loans. Here's what I need to know about marketing. I've got these websites. I go live here. I go live here. I go do this. I do that. I do this. All these different things. They'd say, well, we might have a problem with that. And I'd say, when you say we might have a problem with that, what do you mean? Well, before we put any media out, you need to clear it through our compliance. And I'm like, well, I go live. I can't do that. And they're like, yeah, we might have a problem with that. I said, no, we're not going to have a problem with that. Not at all. Not even a little bit. Nope. I know that bonus looks nice. I thank you guys. I appreciate it. Makes me feel wonderful. It also makes me feel more wonderful to say, thank you, but no thank you. Bye, cross country. True story. That happened.
Crystal 1983, how long do you have to do overtime to be able to include income in accounts?
2 years. 2 years. It doesn't have to be at the same company. If you had overtime from the last company and then you have overtime in the next in this company, well then, as long as you have a 2-year history, we're good to go.
Yeah, David, you're welcome, my man. Jim, yes, that would be over my head if I went the way of removing the asbestos to the roof is still intact. Okay. Other than removing it myself.
Jim, remember asbestos, the reason it's illegal is because it kills people. And if you've ever seen an asbestos removal team, they come in with these weird mass cartridge things, and it's a big deal. It's not a small deal. That's why it's so expensive. And well, you need a good realtor. Yeah. You really need a good realtor, because a good realtor would have known to sniff that kind of stuff out.
I smell asbestos.
And they go, hey, you know what? I need a roof cert. And a roof cert means that a roofing company guarantees this roof is good for 2 years, 3 years, 5 years, or whatever. And if not, they will do whatever it takes to remedy the roof.
Yeah. I have an uncle that died from asbestos, so be safe, Jim. Yeah. Be safe. Christian Noel, back in the house. What percent is 25 basis points?
What percentage? Oh, okay, so she's the new loan officer, right? Yeah. So, all right, cool. So just so you know, basis point is 1 point for 100. Every 100. So 100 basis points is 1%. 25 basis points, 25%. So they talk in basis points because we can't just talk percentages. It gets weird, especially when you get to loan lock costs, because loan lock costs could cost 17 basis points. Well, that's not 1/4%, and it's not 1/8 of a percent. So we got to call it 17 basis points, because at that point we're splitting 1% into 100, and each basis point is a percent.
Florida home girl, help. What is the best thing to put on my letter for underwriting pre-approval for my house? I had a late payment and I need to explain it away. What's the best verbiage I could tell the lender?
Oh, Florida home girl, your LO should be doing all this work.
Yeah.
You need to call Chris, like right now.
I will be a loan officer.
You need to call Chris, because you should not be talking to an underwriter. You should be talking to a loan officer who talks to the underwriter. And the loan officer should be telling you, hey, listen, you have a late. All right, within what, the last 12 months? Cool. What happened? Oh, you had a surgery. Oh, all right, cool. Okay, here's what I need. I need the admission to the hospital. Just give me the paperwork and something that says the insurance paid it. And then we're going to write a letter that said, hey, I didn't expect to have appendicitis, but I got it. And it only happened one time. And because I only had one appendix and it is now gone, I am not going to have another appendicitis. So the rule of thumb for a good loan officer is you have to say what caused it in your letter of explanation, what did you do to remedy it, and how do we know it's never going to happen again? So what I did inside of that quick LOE was, LOE's letter of explanation, I said, hey, I didn't expect to have appendicitis. It just happened. All right, cool. That's what caused it. What did I do to remedy it? I went to the hospital and they removed my appendix. Here's the bills. Here's my entry. And because I only have one appendix, it's never going to happen again. The underwriter will go, oh, all that makes sense. Okay, I will underwriter discretion that one late because I couldn't pay my mortgage because I was being operated on. And I did not set up my infrastructure for anybody else in my network to pay it. That's why I was late. As soon as I got out of surgery, I paid it.
Boom. Also, yeah, she's probably not talking to the underwriter. She's talking to the lender who's going to give it to the underwriter. But your lender should be coaching you on this. Your loan officer should be coaching you on this and teaching you and telling you what is best.
And in fairness, not all loan officers know what they're doing. There's a lot of them who get a license and like, hey, I got me a license. I passed me a test. I know how to do things. You don't know until you've been doing it for about 10 years. You really won't know. Like the thing I just said, any LO on here is probably going, hey, that's good. I need to write that shit down. Yeah. For us, it's common because at one point we didn't know what the hell we were doing either. And the guy who coached me was a great loan officer. He said, all right, here's what the underwriter wants to see. What caused it? What'd you do to remedy? How do I know it'll never happen again? Just answer that every single time in every LOE and you'll be good. And my whole career, I remember that lesson. I'm like, okay, what caused it? Well, I got appendicitis. All right. What'd you do to remedy it? Took out my appendix. All right, cool. How do I know it'll ever happen again? Because I don't have any more appendixes and it's done. Cool.
I love Florida homegirl.
Yeah.
You know why? Because she read it right back to us. She said, what caused it, remedied it, won't happen again.
Yeah.
You're awesome. Thank you for writing that down, guys. Diva Makeup, thank you for the love. Florida Homegirl, thank you for the love. Crystal 1983, first thing I want to start with is thank you for your service.
I appreciate you.
$100,000 a year, $750 a month in debt, payments, $620 credit, VA funding waived. What can I afford? That's you.
Yeah, Crystal. So I'm going to give you a number, but I'm also going to tell you that number can be pushed very far. Very far. So the number is going to be roughly 500,000. Roughly 500,000. However, I'm going after front end back end ratios. And front end back end ratios for Fannie Mae or Freddie Mac are 4550, right? Fannie Mae, Freddie Mac 4550. FHA 45 55.999 or 56. 56.99999. So that's FHA and Fannie Mae, Freddie Mac. However, VA doesn't have a front end back end ratio per se. So they have something called a residual. It's a special calculation on the back end of the loan. And I have funded VA loans with a back end ratio. I think the highest I funded was 72. Now, what it does is it says, hey, can you afford to feed yourself after you buy this house and your family? So the VA residual, the more people you have in your family, so if you have a husband and wife, the residual goes up. If you have a husband and wife and 2 kids, the residual goes up. But if you're a single person, the residual is very low, like $469 low. Very low. Very low. So as long as I have a very tight residual, I can push that back end pretty damn far. So, like I said, 500, but depending on your situation, we might be able to like get further.
About to get a mansion, Crystal. Team Sanchez, I get paid cash for my rental, but I claim it, shouldn't say but, should say, and I claim it fully on my taxes. Can I use that income for my next property?
Team Sanchez, you know the answer. You know the answer because you've been here for a while and I know you're a baller. The answer is yes.
Baller.
The answer is yes, you can. If you report income to the IRS, even if you got it illegally, if you say, hey, I illegally sell bad drugs to people. All right, cool. The IRS is going to go, I don't give a shit. Did you make some money? Yeah, I made $300 grand. You're not a very good drug dealer making $300 grand a year, but whatever. We'll take $300 grand. All right, cool. You reported it. You paid your taxes. You're like, hey, Mr. IRS, here's $45,000 because I made that money and I don't want to break the IRS law. So here's $45,000. Can you use it all day, every day?
Yeah, Florida Homegirl. We're located in California, but we help in all 50 states.
Yes, all 50
states. It does not matter where you are. we will be there.
Florida's one of our favorite states. I try and get him to move to Texas, but I actually think he'll move to Florida before he moves to Texas.
I might. But I don't know, man. It's all about the weather. I gotta spend a little bit of time in both places.
Oh, they're about the same, man. They're about the same. I've lived in both. They're about the same.
Then I gotta look at the bikinis.
Oh, you're gonna love it. It depends where. Yeah. Yeah. In Austin, oh, you'll love it.
Oh man, it's so tough.
I know.
Team Sanchez. They get paid.
Dude, you just made me go to South Beach because I lived in South Beach. They were good there.
A1A.
Detroit Avenue.
Andrea Benson, 550. If a person has a $185,000 mortgage and receives a grant for $150,000, how does the process work?
So if you already have a mortgage,
that's a large grant.
Yeah. Well, first off, you already have a mortgage, so the grant is irrelevant because you have a mortgage. They already took in your income, your assets, your whole situation. They said, "Hey, yes, I will write you a mortgage." Now, a grant means that I'm granting you money for a reason. What's the reason? Now, I think the innuendo is, do I get to pay off my $185,000 mortgage, or can I tap the $185 and tack it onto the $150 for about a $335,000 purchase price? That's a lot. I need more data.
That's a lot.
Yep.
Where do you get $150,000 from? Let me know. I need some.
I know, right? Grant.
Florida home rule. What caused it? How remedy it? And what will happen again? You're good. I love it. Izzy, thank you for the love. Jesse from Austin.
What's up, Jesse from Austin?
Barton Springs in Austin, Texas is awesome.
Oh my God.
We have lakes. Also.
Barton Springs. Oh, I live on Lake Travis. I literally live on Lake Travis. My boat's on Lake Travis. But Barton Springs is something that's amazing. It's this natural spring, and it's like a giant swimming pool, but college kids everywhere.
How are the bikinis, Jesse? How are the bikinis?
Barton Springs is part of it. Barton Springs is amazing. But you know what's really good is going down Lady Bird Lake and down each side I go running and biking down Lady Bird Lake, and it's nothing. There's like 5 colleges all here, and nothing but like in shape college kids just running, biking with their dogs, hiking, families. It's I love Austin.
What's your favorite part about Austin, Jesse?
Yeah, the problem is the problem is it's liberal shit in the middle of Austin. Out where I live, it's not.
What's KS?
Kansas City.
Liberal KS. Is that what he's saying?
I don't know what KS is. I don't know what KS. Yeah. I'm in Cali, he says. I'm in Cali.
Divas Makeup.
Yeah.
I'm in Cali, too.
Yeah, in the middle of Austin. Austin's the original defund the police city, and it was horrible, and it's still horrible. If you have a problem in downtown Austin, the police response time is very slow because the people that are voting right now have voted the police out, which blows my mind. It's stupid.
It'll be better.
But for me, I'm out about 30 miles out, and dude, it is Orange Man country out there. Everywhere I drive, there's Orange Man flying flags everywhere. It's awesome.
Stay strapped or get capped?
Dude, you don't have to stay strapped because everybody's strapped.
Or get capped.
Everybody's strapped, man. Everybody's strapped. It's like an unwritten rule. If you're talking to somebody, they're carrying. They're carrying.
So what's your round of choice?
I don't know. I use 3 and then I ask questions later. That's my round.
Oh, okay. Right on. What do I call it, man?
I don't know. Are we there?
Yeah, let's call it.
You think so?
Yeah.
Okay, you know what? We appreciate you guys. We do. We appreciate you. And if you really want to buy a house, tune in. We will teach you how to do this step by step. Things are going to get better in the real estate market. Let's get you a house. We've been Chris and Lee. We appreciate you. We are out.